Have you ever wondered what the future holds for the stock market? All of us, at some point, have pondered this question, especially as we move into 2024. With so many variables at play, the stock market is a constantly evolving entity, embodying volatility and unpredictability. Today we're going to explore expert predictions, providing a glimpse into possible market trajectories. So, fasten your seatbelts for this exciting journey into the future of finance. Let's dive into the predictions and see what the experts have to say. Firstly, let's explore the bullish view, those who believe that the stock market will rise. This perspective is often characterized by a sense of optimism, as bulls expect the market to continue its upward trajectory. Our first expert is a seasoned Wall Street veteran who suggests that the market's current momentum is a result of robust corporate earnings. He predicts that as companies continue to rake in profits, the stock market will mirror this growth, leading to a bullish market throughout 2024. Next, we have a renowned economist who points to the strength of the global economy as a reason for her bullish outlook. She believes that as international trade continues to recover from the pandemic-induced slump, the stock market will benefit from this global economic upswing. This, she suggests, will fuel a bullish trend that could extend well into the year. Thirdly, a tech industry analyst provides a bullish perspective, arguing that the rapid pace of technological innovation will drive the market upwards. He predicts that the ongoing advancements in fields like artificial intelligence, blockchain, and renewable energy will create new investment opportunities, propelling the market to new heights. Lastly, we have a financial advisor who puts forth a bullish forecast based on the strength of consumer spending. She argues that as consumer confidence continues to rise, so too will their spending, which in turn will boost the stock market. So, there you have it. These bullish experts predict a sunny outlook for the stock market in 2024. Their forecasts are rooted in a variety of factors, from corporate earnings and global economic recovery to technological innovation and consumer spending. But of course, the stock market is a complex entity influenced by a myriad of factors, and these predictions, while insightful, are not guarantees. As always, it's crucial to do your own research and consider multiple perspectives when making investment decisions. So, these experts are expecting a surge, but what about those on the other side of the fence? Now let's turn to the bearish view, those who predict a decline in the stock market. Bearish experts, those who see a downturn on the horizon, have their own set of reasons for their predictions. They argue that the stock market, which has been on a bull run for a significant period, is due for a correction. As the saying goes, what goes up must come down. This is a fundamental principle of the market, and these experts believe that we are nearing that point. A major point of concern for these bearish experts is the lofty valuations of many stocks, especially in the technology sector. They argue that the current prices of these stocks are not supported by their earnings or future growth potential. This, they say, is a clear sign of a bubble that's ready to burst. Another argument made by the bears revolves around interest rates. They warn that if the central bank decides to increase interest rates to curb inflation, it could lead to a significant pullback in the market. Higher interest rates make borrowing more expensive, which could hinder corporate profits and slow down economic growth. Furthermore, these experts point to geopolitical tensions as a potential trigger for a market downturn. They argue that uncertainties in the global political landscape, such as trade wars or conflicts, can lead to market volatility and a potential sell-off. Finally, some bearish experts are concerned about the state of the global economy. They argue that signs of slowing growth in major economies could lead to a global recession. This, they believe, could have a domino effect on the stock market, causing a significant decline. Of course, it's important to remember that these are predictions, not certainties. The stock market is unpredictable and influenced by a myriad of factors. While these bearish views may seem alarming, they represent one perspective in a wide range of expert opinions. As you can see, the world of finance is a realm of differing opinions. Finally, let's consider the realistic view, those who believe the market will maintain a steady course. This perspective offers a more balanced outlook, one that's neither overly bullish nor excessively bearish. It's the middle ground, the voice of moderation that often gets drowned out in the clamor of extreme predictions. Many financial experts champion this stance, arguing that the stock market, much like a pendulum, will eventually find its equilibrium. They point to historical trends, reminding us that markets have always experienced ups and downs, booms and busts, yet over time they've stabilized and grown. Take, for instance, the prediction of renowned economist Dr. Jane Smith. She believes that while there may be fluctuations in the short term, the long-term trajectory of the stock market will be upward. Her view is rooted in the fundamental strength of the economy, the resilience of businesses, and the innovative spirit that continues to drive growth and prosperity. Then, there's financial analyst John Doe, who suggests that the market is likely to see a period of consolidation in 2024. He bases this prediction on the expected moderation in corporate earnings growth and a potential tightening of monetary policy. Yet he also emphasizes the opportunities that such a scenario presents, particularly for discerning investors who can identify undervalued stocks. Lastly, we have market strategist Laura Brown, who posits that the stock market's performance in 2024 will be largely influenced by geopolitical factors and policy decisions. She cautions against panic-driven decisions, advocating instead for a measured approach that balances optimism with pragmatism. In essence, these experts propose that the stock market in 2024 will neither soar to unprecedented heights nor plummet to disastrous lows. Instead, they expect it to navigate the middle path, adjusting and adapting to the various factors that impact its trajectory. These experts suggest a more grounded approach, but who has the accurate prediction? Now that we've heard from the experts, what are the key takeaways? Let's start with the bullish perspective. Our experts predict a robust year for the stock market in 2024. They believe that the economy will continue to bounce back from the challenges of the past few years, with industries such as technology and healthcare leading the way. They also anticipate a surge in emerging markets, which could present exciting investment opportunities. The bearish experts, on the other hand, have a more cautious outlook. They foresee potential challenges that could impact the market, including rising inflation and continued geopolitical tensions. These experts suggest that investors should consider diversifying their portfolios to mitigate potential risks. Then we have our realistic view experts, who fall somewhere in between. They agree that while there are promising signs for growth, there are also potential obstacles that could shake up the market. They stress the importance of staying informed and being prepared to adapt your investment strategies as the market evolves. So, what are the common threads here? Firstly, all experts agree on the unpredictability of the stock market. The future is never set in stone, and the market will always be influenced by a myriad of factors, many of which are beyond our control. Secondly, diversification is a key theme. It's clear that a well-rounded portfolio can help to weather potential storms. Whether you're bullish, bearish, or somewhere in between, spreading your investments across a variety of sectors and markets can help to balance risk and reward. Lastly, staying informed is crucial. All experts stress the importance of keeping up to date with market trends and global events. This knowledge can help you make informed decisions and potentially capitalize on opportunities as they arise. Remember, these are predictions, and the stock market is always full of surprises. So keep these takeaways in mind, but also trust your instincts and make the decisions that feel right for you. After all, in the world of investing, there's no one-size-fits-all strategy. So what does this mean for you as an investor or an enthusiast? Well, let's break it down. The world of stocks and investments is a complex one, filled with differing views and opinions. And while expert predictions can provide valuable insights, it's crucial to remember that these are just that, predictions. There's a certain allure to the bullish view, with its promise of lucrative returns and booming markets. Equally, the bearish perspective can act as a sobering counterweight, reminding us of the inherent risks and potential downturns. And then there's the realistic viewpoint, often a blend of optimism and caution, offering a balanced perspective on the ebbs and flows of the market. What's important here is not to blindly follow one view or another, but to understand the reasoning behind each. This understanding forms the basis for your personal research, which is an essential part of being an informed participant in the stock market. You see, making decisions in the stock market isn't about simply following trends or betting on predictions. It's about diligent research, thoughtful analysis, and calculated risk-taking. It's about navigating the complexities of the market with a clear head and a keen eye. So whether you're a seasoned investor or a newcomer to the world of stocks, remember to always approach the market with curiosity, caution, and a readiness to learn. As always, the future of the stock market remains a fascinating mystery. Stay tuned for more insights and predictions.